So I was talking to some people yesterday, and I got to address the elephant in the room, okay? They were telling me that they thought all my videos were recorded, scripted, planned out, all of these things. That's not the case, okay? Let me tell you how these videos go down so you can have a better understanding of where I'm coming from when you're watching these videos. I think that's better for you, and it will hopefully give you some more value out of my videos. So what happens is I spend, let's see if I can flip the camera, whatever. I can't. Pretty much all day watching the news, seeing what's going down in the world. I hope you got that. There it is. Yeah, there it is. Figuring things out, thinking about things, listening to things they pop up, doing my thing. I've got clients, I manage their money, I'm making sure I'm managing their money right. And then 4 o'clock hits, open my phone, press the camera button, swipe to video, and record a video. That is it. Occasionally, on maybe 2 or 3 occasions, I have texted myself a few bullet points, and I just texted myself them, and they're on my laptop, which is right next to me, but I don't even look at that. I'm just looking at the phone, recording the video. So I want you to understand the videos are not scripted. This is from my heart. I should probably do some more preparation, and as the account grows, as I start the hedge fund and have more clients and need to provide more in-depth analysis on a daily basis, I might need to plan things out and have a fact sheet right in front of me, but then I can't get the video out right after the market close while it's still after market hours. So there are trade-offs. We just need to keep that in mind. As for the rally today, what happened with this rally? So let's think about, it's a bigger picture. Let's take a bigger picture today. Let's think about what caused the sell-off, the big sell-off on Thursday. Nothing really. There were slightly rising coronavirus cases in some states like Texas and Arizona, but there was no serious catalyst. We saw on Tuesday and Wednesday of last week that there was a defensive rotation out of the Dow, which is what the laggard had been for the larger rally off the bottom. The Dow on Monday and several days before that was the leader, followed by the S&P and then the Nasdaq. The Nasdaq is the software tech. They were the first ones to rally, and they rallied the hardest at the beginning and began to slow as the rally started to peak up and really start looking more like a V than a Nike swoosh. So Tuesday and Wednesday, we saw rotation back into those safer tech companies, Amazon, Apple, Microsoft, the Nasdaq companies that don't seem like they're going to go away, that are benefiting from COVID, and away from the cyclical Dow industrial companies. And then on Thursday, we saw an aggressive sell-off. This was the biggest sell-off of the entire rally, which has had sell-offs, especially at the beginning when it was very volatile, and throughout when there's been some rise in pessimism or some rise in fear. It seemed like that happened again on Thursday, but it seemed to me like on Thursday that it might just be a little bit of a shakeout. There were all this new money, all these buyers, all these, Robinhood. I'm a Robinhood investor. My money's in Robinhood. But all these people going to things like the travel stocks, Hertz, it's like they want people that want to see a big return or are okay with nothing. They don't want to see something in between. They want to double their money or get nothing. That's it. So, that seemed to be like taking the market up a little bit. And not only that, there was a jobs report that was fantastic. But the rally was already strong. And in order for the rally to have been justified, we needed to see that kind of jobs data. Some people were expecting it, others were not. It was a little bit better than a lot of people expected, but we, as a rally, were expecting fantastic recovery data. So we got that fantastic recovery data, and then the market improved its trajectory. So that trajectory led us into further overbought territory. And then once the coronavirus cases started to creep up in some areas and people started to all of a sudden 180 their expectations and question a whole lot of things, the market quickly started selling. People were just like, I need to get out. I need to cash out. I've seen my gains. Don't want to go through this retesting the lows bottom again. There was this guy, CIO of Guggenheim, who said expecting 1,600 on the S&P. Like, what we're supposed to be worse than we were at the bottom, which I just think is so not the case, because when we were at the bottom, we were at peak fear because we had shut down the economy, which had never happened and had completely unknown effects. Now, Mnuchin came out and said, we're not going to reclose the economy. Trump has said multiple times we're not going to reclose the economy. And I think as a country, there's no appetite to go back into lockdown and reclose the economy. So we need to understand that what was previously thought as the worst case scenario for a period of time and led us to that bottom is fundamentally no longer the case and will not happen, and we've had positive recovery data since then. So there has to be some sort of floor given the reality of what is happening with the economy and what is happening with the virus thus far. We're going to get to some more in a little bit. On top of that, there's a record high savings rate, a ton of retail day-to-day people that are entering the market, and lots of hedge funds that have lots of cash on the sidelines. All of these bonds that are being bought up by the Fed, giving cash back to these institutions, these rich people in these hedge funds, and not all that money's in the market. We're at like a record level of cash on the sidelines that needs to get into the market. So I think that there's further catalysts for upside, and this pullback may have rejuvenated this continuation of this long-term bull market rally. I don't think it should be a V. I think it should be a Nike swoosh. We take the stairs on the way up and the elevator on the way down, and we are currently taking the stairs on the way up. So, positive virus news. It seems like we're going well with the vaccine, and that's ultimately the most important thing. Now, I don't want to get into any deep state things, but I'm a master speculator, as I self-proclaimed master speculator. Israel is trying to buy the entirety of Moderna's vaccine, the rights to it, I guess maybe the rights to produce it. I don't know how the production is going to go down. What matters is they want to buy the vaccine. Now, Israel is a very contentious country. There's a lot of people who like to throw them under the bus and just hate on Israel. But they're a great country, great technological advances. And if they don't have any vaccine, well, it's going to be hard for Israel to get a vaccine. So they want the vaccine, but most importantly, they want to repay the United States somehow. They want to repay the United States. The United States has done a lot for Israel, haven't they? What better way to pay the United States than to provide the United States with the winning vaccine? So I'm speculating that Moderna has a very good vaccine that is entering the final stage of trials in July, which is very soon, very close to being done. And I'm speculating that Israel has identified Moderna's vaccine as a winning vaccine that will win. And I'm sure they've consulted with Moderna, and I'm sure they've probably consulted with President Trump, and is buying the vaccine and is going to cut a good deal with the United States to provide that vaccine to the United States. So, and maybe win favor with the rest of the world. So I'm very optimistic about the vaccine. I think that will be the final catalyst in the rally that will, give us confidence in the world again. So I really do think we have a floor under the market. There's a level at which the market can't reach. And if for whatever, I'm not going to say can't with anything in the market, or can with anything in the market for that matter. But if the market were to oversell, I would be a buyer, as I have been a buyer the past couple days, as I was a buyer first thing this morning, and as I'm going to likely continue to be a buyer as more cash comes my way, as more clients want to invest with me. So if you need somebody to manage your money, I'm all ears. If not, I'm going to keep providing you analysis so you can make your own decisions. So until tomorrow, peace.